right, good afternoon, folks. This is Ferrisling with Trade with Tex, and we are going to kick off another Sunday YouTube video here talking about some of the charts that we're looking at for the upcoming week. So whether you're a day trader, swing trader, these videos are geared to just help you prepare and know what targets to use for your trades next week. We'll go over trend analysis and key levels, okay? And we're going to kick it off with the S&P 500, but we are going to talk about a few momentum plays throughout the video, so make sure to stick around. All right. Also, quick reminder, I know it is a March Madness college football crazy day, but if you do like the educational side of things, subscribe to the channel, right? Make sure that you're passing along the video as well. And we do have the $50 a month Trade with Tech membership, but if you don't want to actually pay that, try it out for a free week and see if you can absorb as much information as possible. Okay, we do live audio and screen sharing in there too. But either way, we're already a minute in and we got to look at some of these charts. So let's do it. All right. Now, the awesome thing about this S&P chart, and we are looking at futures here, just to be clear, that's why we have the ES ticker top left. You can use SPY, SPX, whatever you want. It's the same technicals. But we're looking at the daily time frame, and you can see that last week, right, if we roll this back, wasn't really giving us a whole lot to work with. We had a couple of choppy days and then a bigger sell-off towards the end of the week. Okay. So you know, the idea was that since we had defended this moving average, since we had defended the key Fibonacci retracement support, so just to recap, that's the 20 SMA, right? Simple moving average on the daily time frame. And on top of that, the Fib, which was at 3880, okay, we just rounded that up. Since we had defended that area that we were going to bounce this week. Now, the tricky part is we actually pulled earlier this week, right? Tuesday, Wednesday, we had a pretty aggressive sell-off and we retested that zone. That's not a good sign, right? When we retest the zone like that, so you can see that we pulled Tuesday, Wednesday, right back to that zone. When we retest, we're kind of chipping away at a wall. So the thing I didn't like about going into this prior week was that we didn't have a clean signal of what was going on. We just knew that we were holding support, so we were looking for the next leg up, right? But the best part about this week is the trend analysis, right, and the key levels are lining up pretty well. Now, the reason I said we were going to kick this off with the educational aspect is because there were a couple of telling things that were telling us we were bouncing Thursday and Friday, and these things should be able to help us gauge the movement next week. First thing is basic trend analysis. We have a lower length moving average, right? The 8 EMA and the 20 SMA. Some of you guys might be scoffing and going, oh, 20 SMA, I use the 21. Whatever works for you, right? It's the same concept. The 8 is that pinkish purplish line, and then the 20 SMA is this blue line. And basically last week, we never actually crossed those downward, right? In the sense that the lower one crosses below the 20. So since that had never happened, right? Since that never actually occurred, we were still pretty comfortable with swing trading. We were still pretty comfortable, holding positions throughout the day. Yes, we were being selective with what day trades we took, but ultimately, that's not really a cause for concern because we didn't see that drop below. Versus the last drop off, if you guys remember, back here, we had the 8 cross below the 20, so we got a little bit concerned there for a deeper pullback, and we did actually get a deeper pullback. Okay. Now, again, trend analysis is good here. The 8 is above the 20. That means we have some kind of trend trying to form. With regards to the trend, and this kind of changes the way that you trade it, if we can stay above 3944.5, which is this resistance right here, that's even better. We'll get a more aggressive trend because that means that we are above the previous swing high. So just the basics of this, right? We've broken above that previous swing high. That means we have a very high likeliness of putting in a higher swing low and moving up some more. Okay? Or the other part of this, we could just keep gradually moving up as it is. But bottom line, above that area, this is a very strong chart. Now, there are actually two other things I wanted to point out here, and we'll go over targets in a second. The other two things, so we had the 820 stay intact, right? That's bullish. The other two things is that we had the IWM, so the Russell 2000 index, and the Dow both form hammers on Thursday, which is indicative of buyers stepping in. So a hammer candlestick formation, you can see it from the S&P too. The hammer candlestick formation tells us that buyer stepped in because we have a big lower shadow and it closes above the previous close. Okay, if that completely lost you, we do have a video on candlesticks on the YouTube page, right on the channel. It's an older one, but you know, it's just as applicable. You know, the Japanese have been using these since 1800s, so it's really just a timeless way of looking at charts. But basically, if we get that hammer candlestick next 1 to 2 days, very probable that we get a rally. We got the rally, and that has contributed to the trend a little bit here. Okay, I'm not going to go show you the Russell 2000 and the Dow chart just for the sake of time, but it's the same exact candlestick formation. Okay, now the last thing, and then I'll show you guys the targets for next week, is that the 50% Fibonacci retracement held. This is a little bit more advanced, but it's a very simple way of looking at charts. You draw your fibs left to right, correct? Right, so we're looking at this chart, and we can see that this is the low, this is the high. The fibs that we were using were from 37.20 up to 39.78, the all-time high. Okay, so what that does, and we can even draw these from scratch here just so you guys can see the process. Again, I wanted to show you the educational side of things just for a few minutes because this was a textbook week, okay? But as you can see, after we draw those fibs just low to high, we have 38.80 as the big support. We had talked about that. And then the next one was down at 38.49.5. Now, I know everybody and their mother on social media is saying, oh, we got a clean bounce off the 50 daily SMA. But that's not true, right? We fell a lot before reclaiming that level, and we went straight down to the fib. The fib is what held us up, because the rule of thumb is that if we cross the 50% line, the trend is shifting. Okay? So if we had crossed below this and stayed below it, bulls are screwed, right? At least short term. We would immediately drop down to the next level, and we would just keep taking down these levels below until we reclaimed. Okay? So the big telling factor this week was that we defended that trend intact with the 820, and all the other major indices did the same thing except the NASDAQ, but you know, tech has been underperforming, so that's a given. Okay? So the S&P rallied off that level, and moving forward, that is still going to be a significant support level. Okay, so basically, it's not 38.50 roughly, right? 38.80. Okay, that's here and here. These are still going to be key support levels, but we are expecting a swing low and just support above that area for more constructive action, right? We don't want to keep revisiting that and chipping away at that wall. That's meaningless action, and more importantly, that's not very fun to trade, right? It's not decisive. So what we want now, as you can see, just using these same fibs, we want a base above 39.17.5. And if that's the case, if we can hold that fib, we should be able to tag the all-time high and then our next target of 39.97. Okay, so it's 39.78.5, 39.97. And you might be thinking, Ferris, I trade momentum stocks. This is irrelevant. It could not be more relevant, actually, because there's been so much volatility lately and there's been so much range that this is actually pretty vital for day trading and swing trading. You can't without looking at the S&P. Okay, so if this level holds, these are the next targets overhead. There are two more nearby levels, and I'll zoom it in to show you. So this is just the hourly time frame. The two other nearby levels are the 39.44.5 that we talked about. So let me erase this and write it below. 39.44.5. Okay, and then 39.20. Which is basically where all of the moving averages are converging. This is clearly the big support. This is what we were looking for a bounce off of on Friday. It did not bounce there, but when it reclaimed, as you can see, we had that huge run into the close. So it wasn't just that we reclaimed that zone, but that was part of it, right? And that's gonna be a big support zone below, okay? So these are all the key levels. I know it's a lot, but that's because we gotta make sure that we are protecting ourselves from downside risks. So support right here, put a little S next to it. And then I guess technically this level is now support 2, target. Okay. And if you missed any of those levels, you can just pause the video, write them down, or post them on your chart. Okay. So the S&P, we are expecting higher this week. Ideally, we pull back and get some good risk to reward, 39.20, 39.44, before that happens. Okay. Now, basically going into next week, we have kind of an odd scenario here where when we're looking for opportunity in the markets, because that's what this video is for, right? It's to help you make money, not just say, hey, this is how much we made, look how great that is. That doesn't help anybody, right? Now, looking at groups, there have been a couple of groups that have been hot lately, right? NFTs, we can talk about that all day, we can make jokes about all day, but that's basically been the lead momentum group for the past 2 weeks. China stocks have taken a beating, right? Select names, but still. And then infrastructure plays. And I'm just going to put INFR here because I don't want to write all that out. So basically, these are the three groups I'm looking at. Tech and growth stocks haven't really done all that much. You know, small caps are still underperforming. I don't really want to trade Cisco and these boring Dow stocks. So for me, what's a priority is recognizing these groups and following them. For infrastructure stocks, we made a decent amount on Rail and X on Friday, but they didn't close out the best candles. Rail didn't close out a good candle. X closed at resistance. So if infrastructure plays start moving, because I think Biden's speaking next week too, so he's probably going to try to pump that up a little bit, then we'll look at X, which is US Steel. Okay, you guys are probably pretty familiar with that one because it's a very fun stock to trade. Also, a little side note, I don't know why my thinkorswim levels are not showing up for X. You can see a couple here, but these aren't the key levels I have, so don't write any of those down. Okay. But for the other two groups, I'm not crazy about the NFT hype. I see the potential, but short term, the stocks just don't look very good because they've ran up a lot already. So that leaves us with China stocks, right? And really, there's nothing to about because they look like crap. But the fun part is that on Friday, there was a lot of craziness where we had an even bigger pullback, and probably a better example is IQ here, right? This is one of the pretty popular China names out there. Friday, we had this massive volume pullback, and I don't want to, come on here spouting a bunch of BS. It could be for multiple reasons, but there were a few headlines about Goldman Sachs throwing out some big block trades, which are pretty much just massive size trades, right? That's the idea. On a lot of China stocks, having to liquidate some positions. And, the other part of it was there was another headline that a big prop trader in Southeast Asia had blown up their account. And because of, Viacom and some of these other plays, he had to sell a bunch of his other positions because of a margin call. So likely what we're seeing here with this massive pullback, right? 1, 2, 3 day pullback from 52-week high to 52-week low for a lot of these China stocks is just, an unusual, quirky circumstance that we can take advantage of. Now, before we talk about targets and what exactly we want to happen here, because of course we're going to create a game plan for next week, I want to just make a point of saying this is a falling knife. So if you're an inexperienced trader or you're not that consistent, you might want to either use smaller sizes or not trade it, because a lot of traders will just shy away from this in general. Because we're on day 3 of the sell-off, and because we have reclaimed a couple of key levels, I'm going to watch these plays. I traded them on Friday, right? Baidu made a few grand on that one on Friday, and that wasn't even one of my better trades. Okay, so the two that I'm looking at are Baidu and IQ. All right, you can look at a number of them, but these are the two that I'm comfortable with, and that's pretty important during this volatile of a move. IQ reclaimed a key level. Baidu reclaimed a key level. I'll show you what they are, and I'll show you how to get your targets for these stocks. Okay, so this is a pretty simple game plan because we're not going into this saying, this is what I want to happen. We're saying this is what needs to happen. If not, I cannot trade it. All right, you got to be strict with these names. So for IQ, the game plan is actually pretty simple. It has a ton of support in 2 different areas on this chart. One is the high 16s, low 17s. And I'll give you the exact levels in a second for the game plan. The other is down in the 14s, which it came down to, it held, but it was free falling. Again, I was not going to catch a falling knife, so I wanted to wait for the daily close before we looked at it. So it did defend both of those zones by the Friday close, but we have to be strict. We have to say, all right, it needs to hold the nearest zone, which is right here. in order to keep bouncing. So first part of this game plan is what needs to happen. What needs to happen is it needs to stay above these two levels. We'll take the higher of the two, 1714, which is a big historical support level, in order to keep this bounce going. The other part of it is that we don't really have a target since it's in free fall. So one of the things I do when we have a lot of range and a lot of volume during a specific time period. So it's very obvious that if we were to look at this chart and see where the price swing was and see where the volume increase was, right here, yes, and that was off the support, but also right here, past 3 days. So what we're gonna do is we're gonna take last week's candle, right? We're gonna switch this from the daily time frame to the weekly, all right? And we're gonna draw our fibs on this candlestick, our Fibonacci retracements. Again, seems more advanced, but the best part about this is since there's a big price move and since there's very high volume, it makes it really easy to get distance targets, right? We don't need to focus on smaller moves. We can look for bigger moves with smaller sizes and still make a decent amount. So for IQ, all you do, since it's a red candle, you go high to low, right? If it was a green candle, we'd go low to high. So again, red weekly candle, high to low. That's how we draw them. So I'll redraw it here just so you can see. I'll remove it. I go over to my fib retracements, high to low, all right? And that's basically 28.97 to 14.6, but that shows us what the key levels are overhead here for our bounce trade. So simple game plan now. It's a little more advanced than getting there, but simple for the actual trade. If it holds 1714, which is right here, we bounce to 1799 and then all the way to 20. I know the fib is 2009. I'm going to just say 20 because that's under the mental resistance. All right. And that's a more realistic target. Okay. If it loses 1714, I'm actually not going to short. I'm going to wait for it to come down to 1435. You can see I already have an alert set there. I'm prepared, man. I'm ready to kick this week's ass. So 1435 would be the next big support zone, but game plan right now, key level to key level on the way back. All right, we're gonna do the same thing for Baidu. Higher priced play, but it trades like a penny. Actually, you can see the weekly chart right now. This kind of saves me some time here. You can see that I drew my fibs high to low, same thing. So I'm gonna keep moving with this video, but this is something you need to do. So this is where you pause the video, go to your Baidu chart, and draw them high to low on this past week's candle. All right, that gives us some targets overhead, but interestingly enough, Baidu came down to a key moving average here. It's the 200 weekly SMA on the weekly time frame, obviously, but it barely missed the 200 daily SMA, which was really tricky, and it rebounded off that area really aggressively. So that's going to be the line. The problem is Baidu bounced a lot more than IQ did, right? So we actually do have more downside risk here. So for Baidu, I'll zoom it back to the daily chart. But basically, we are at two key zones here, 208.5, which stretches all the way up to 209.6. All right, that's the zone overhead, 209.61. And then the support, we have 191.74 as the nearest major fib, that light blue line here. Okay, the move I'm looking for is over 209 to 220. And you might be thinking, Ferris, this is a $200 stock. I don't want to trade this thing. You do. It's really aggressive. It's a very fast mover. And, you know, you don't need a lot of size here, right? That's another 5-10% move if this sets up. So 220.6 would be the first target. The signal is if it can break and hold 209.61. Again, if it gives that back, bail, right? Or just don't trade it because it has a lot of downside risk, okay? And then wait for 191.74. All right, so Baidu bounce play, looking for 220s, pretty straightforward. All right, now last two charts, and these are gonna be a lot faster. Not everybody wants to trade risky China stocks, I get that. There are two other stocks that I'm looking at for potential swing trades, right? So options traders, swing traders, this is something you might like. TTD, the trade desk, really solid fundamentals, and best part is it's rebounding off the 200 daily SMA. Okay, so basically for TTD, if it holds 641.3, that's where you'd set your risk. Then it should keep bouncing, next target being 698. Okay, risk to reward is not ideal, so if you want to set it tighter, be my guest, but this would be the target area. Okay, just a standard moving average bounce. Did it last time, way more aggressively. Good part is that 698 fib lines up with the moving average, so we know that's pretty realistic upside. Only thing I don't like, tech stocks have not been doing too well. So I would need a little bit of market strength in order to take this trade. Okay, just a little bit of reassurance. Last ticker is XOM. Notice we're not going over pennies because a lot of these pennies still look very rough. But XOM, Exxon, right? Energy stocks were on a tear, for months and months and months. And this stock actually reclaimed a pretty big support level. If you look at the weekly time frame, again, larger time frames equal larger moves. That's a hammer that formed right there off of a key moving average. Okay, last time we held the moving average, we got this move. I'm not expecting the same thing since we had such a hard pullback. So we're going to use more modest targets here. Okay, the other part of this is you do not want to be holding an oil stock when oil is dropping. We trade oil daily, right? We trade it religiously, actually. And oil, I'll tell you right now, the key reclaim, so CL is the futures ticker. Key reclaim, look how crazy this chart looks right now, is 61.61. Okay, so just set the alert over 61.61, and if that triggers, Exxon comes into play, right? XOM. Okay, so that would lead to a bigger oil bounce back. Here's the kicker, and this is the last thing I'm going to say, and we'll wrap this video up. The kicker is, if you don't like trading large caps, if you want to trade pennies, there are a ton of oil penny stocks that have good risk to reward right now because they pulled hard last 2 weeks. So they're not the prettiest charts, but again, if this breaks over 61.61, right, just set your alert for oil, then you're good to play any one of those as long as their chart is half decent. XOM has a decent chart, and the targets we're using are 58.5, 59.5, roughly 59.46. Okay, so a lot of different names we went over, but basically the S&P we are expecting higher this week. Ideally, we get a base 3944.5 or 3920 as support. Okay, because we had such an aggressive close, we want to let it breathe a second before we just chase it up. The other part of it is the China stocks. Really good momentum, really good risk to reward. You don't need a lot of size. Okay, pick one. You don't have to watch both. All right. And then the last two I mentioned, TTD and XOM. XOM if oil triggers the alert, so you got to set that alert, and then TTD for a swing idea here. Okay, so hopefully you guys enjoyed the video. I know there's a lot of March Madness crazy basketball on, but set a couple minutes aside, prep that chart up, because this past week was not easy. But if you kept prepping up day and night, you banked Thursday and Friday, right? That's where the majority of the opportunity was. Okay, but anyways, guys, hopefully you guys made some money with us Thursday, Friday if you were in chat. If you weren't, next week's another week. You can join us for a free week, and I hope you guys bank. All right, I know what we'll be doing. So have a good weekend, folks, and good luck trading this week. All right, take care.